Welcome to another REG walkthrough video. I'm Logan, and in today's video, we're going to be going over hobby and personal use asset losses. And we will be doing that the superfast CPA way, which is diving straight into questions to learn the material. If this is the first thing you're seeing from us, or if you want to learn more about our strategies, make sure you go to superfastcpa.com and check out our free 1-hour webinar training, where we go over the 6 key ingredients to passing the CPA exam. Again, it's only 1 hour long, it's free. Definitely go check that out. It will save you a ton of time. Also, if you like the idea of using questions as your learning material, make sure you check out our Superfast CPA app, where we not only have audio notes and review notes, but also 5-question mini quizzes that you can easily access on your phone throughout the day to continually be learning. With that said, let's get straight into the questions. Now, as we get into these questions, I just want to point out this video will be a little bit shorter than the other ones because we are only going over hobby losses and personal use asset losses, and those are pretty simple topics, and we're not going to dive super deep into them because there's not much to dive into. One very common type of loss that falls into this same category of hobby losses and personal use asset losses is something called wash sale losses. Now, we're not going to cover those in this video, but if you want to learn more about wash sale losses, make sure you go check out the video linked in the description where I go over wash sale losses specifically. With that said, let's go ahead and go into question 1. Margaret has a passion for painting and regularly sells her artwork at local art fairs. She has a full-time job as an engineer, but she dedicates her weekends to painting. Last year, Margaret sold several paintings for a total of $6,000. Her painting-related expenses amounted to $8,000 for art supplies, framing, and fair booth fees. Margaret's painting activity hasn't ever turned an overall profit. Which of the following is correct regarding Margaret's tax return for last year? Okay, so this is what would be considered a hobby, and we're going to learn more about that in the answer. So take a second if you need to kind of read through this and make sure you understand what it's asking and what it's saying. But when you're ready, come back and we're going to look at the answer to learn more about how hobbies are treated. Okay, and here is the answer. So Margaret must report the $6,000 of income, but she cannot deduct any expenses since the activity is considered a hobby. So let's learn why it's considered a hobby. Since Margaret's painting activity is classified as a hobby because it hasn't shown a profit in at least 3 out of the 5 years, she must include the income from the activity in her taxable income, but cannot deduct the expenses associated with her painting hobby. The IRS differentiates between hobbies and businesses for tax purposes, primarily based on the activity's profit motive. Under current tax law, specifically after the Tax Cuts and Jobs Act of 2017, while income earned from a hobby must still be reported, taxpayers can no longer deduct expenses associated with their hobbies. Losses from hobby activities cannot offset other income, effectively disallowing the use of hobby losses to reduce tax liabilities. The determination of whether an activity is a hobby or a business is subjective and considers several factors such as the taxpayer's efforts to make the activity profitable, the manner in which the activity is carried out, expertise, time, and effort put into the activity, and the history of income or losses from the activity. However, a general rule of thumb is that if an activity is profitable in 3 out of the past 5 years, the IRS presumes it's conducted for profit and therefore considered a business, allowing for more favorable tax treatment of expenses and losses. So essentially, if you're doing something, either you don't care about making money, you're not doing it to make money, so you don't even care, that's a hobby. Or more specifically in this situation, she is getting money from it, but in the end, she's spending more money than she's making, and that's how it's been always. She's never made a profit in the end. That's considered a hobby. Now, if she had turned a profit in 3 of the past 5 years, then it would not be considered a hobby and she could consider it a business and deduct the expenses. Now, again, as it said here, there are multiple factors, but overall for the CPA exam, the thing that you need to know is that a hobby is something that is not done to turn a profit, or it has never really turned a profit in the past 5 years. Like, that's the easiest way to think about it. So let's go ahead and go to the next question just to hammer that home a little bit more. Okay, question 2. Emma has been making handcrafted jewelry as a pastime and occasionally sells her creations at local craft fairs. Over the past 5 years, she reported a modest profit in the first year, but her jewelry activity has incurred losses in the following 4 years. Despite her losses, Emma has maintained detailed records, conducted the activity in a businesslike manner, and has continuously sought to improve her craftsmanship through courses and workshops. In the current year, Emma has gross receipts of $12,000 from her jewelry sales. Her expenses for high quality materials, booth fees, marketing, and educational workshops totaled $17,000. Based on the IRS rules for hobby losses, how should Emma treat her income and expenses from the jewelry activity on her tax return? All right, we learned how this works in the previous question. So pause the video, think through it, and once you've gotten your answer, go ahead and come back and we will look at the answer. Okay, and the answer is that she must report the income, but she doesn't get to deduct any of the expenses, again, because it's classified as a hobby. Since Emma's activity has not been profitable for 4 out of the past 5 years, it is classified as a hobby. So even though she did make a little bit of profit at one point, and she has maintained detailed records as if it was a business and done all these things, because she hasn't made a profit in 3 of the past 5 years, she cannot deduct the expenses, but she does have to include the income. It's kind of brutal, honestly. So that's how hobby losses work. That's pretty much all we're going to go over for hobby losses. We're going to go over one more question about losses from personal use assets. So let's go to the next question. Okay, question 3. Jacob purchased a recreational boat for personal use 5 years ago for $50,000. This year, he decided to sell the boat due to lack of use. The boat was sold for $20,000. At the time of the sale, the boat had significantly depreciated in value due to normal wear and tear, and Jacob had made no significant improvements to the boat since its purchase. On his tax return, how should Jacob treat the $30,000 difference between the purchase price and the selling price? Okay, we don't know how losses from the sale of personal use assets work yet, so let's go ahead and look at the answer. Okay, Jacob cannot claim a loss since the sale of personal use property is not deductible, and therefore he should not report the $30,000 difference on his tax return. And here's the small explanation. The loss from the sale of a personal use asset, such as a recreational boat, is not deductible on an individual's tax return. Personal use property is considered a capital asset, and while gains on the sale of such assets are taxable, losses are not recognized for tax purposes. So yet again, another situation where you'll get taxed for making money, but if you lose money, you can't reduce your taxable income. And that's pretty much all I wanted to go over. To finish the video, let's do one more part of the Superfast CPA strategy called pillar topics. Now, just a reminder, or just letting you know if you haven't heard it before, the idea behind pillar topics is as you're going through the questions or after you've gone through the questions to learn the material, you will have noticed 3 or 4 topics that are obviously important based off of the questions you saw from your review course. So you take a second and write down those important things so that you can remember them for the future. So let's go ahead and look at the pillar topics for this video. Okay, here are the pillar topics. Hobby losses are not deductible, plain and simple. An activity is considered a hobby unless it turns a profit in 3 of the past 5 years. Income from hobbies is taxable, while the expenses cannot be used to reduce taxable income. Losses from the sale of personal property, such as a boat or a personal use car, anything like that, that's just for you to use, not for a business or anything like that. Those are not deductible. However, gains from the sale of those personal properties are taxable. And that's all I wanted to go over in this video. Again, one more topic that you might want to learn about when it comes to disallowed losses, because that's what we went over in this video, is something called wash sales. So make sure you go check out the video I have linked in the description where I have a video all about wash sales. With that said, that's the end of the video. Make sure you go to SuperfastCPA.com and check out our free 1-hour webinar training. And also check out our Superfast CPA app where we have 5-question mini quizzes that you can use throughout the day to continually be practicing. If you liked this video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.